Hello everyone, welcome back to another video. In this video, we'll tell you how to calculate income tax and how to optimize your income tax. Here we have a fresh graduate, manager, and junior director. Let's find out how much their take-home salary is. Before that, we need to know how much their gross salary is. The average annual salary in Singapore is 40k, 100k, and 200k respectively for this position. It could be more if you work for investment banking or oil trading companies. In this calculation, I have reflected only one assumption. A manager and a junior director have 2 children. Let's see the result. For fresh graduate, income tax is $550 and the tax rate is 1.4%. For manager, 3,300 and 4.4%. Lastly, for junior director, the tax is 19,000 and the tax rate is 9.6%. I would say Singapore's middle class has an income tax rate less than 10%. Let's see how to calculate it. On the left, you have a tax rate table. Singapore follows a progressive resident tax rate starting at 0% and ending at 22% above 320k. Let's take an example. A fresh graduate. The first step is to divide her salary to find the corresponding tax rate. In this case, 20k, 10k, and 10k. The tax rate for each are 0, 2, and 3.5%. If you multiply this, you get 200, 350, and the sum is $550. You may be questioning whether there are tax reliefs. In Singapore, you have tax reliefs and tax rebate both. On the right is the tax calculation formula. In brief, first, subtract personal relief from your total income to get your chargeable income. Second, multiply the tax rate as we just did. Finally, subtract the tax rebate, then coming up with net tax payable. Before going into detail for tax deductible items, let's find out what other income is. There are 5 types of other income, namely dividends, interest, rent from property, royalty, charge, estate trust income, gains or profits of an income nature. I was asked many times about dividends and interest. Only the dividends listed here are taxable. Most of the cases, dividends you receive are not taxable, again if not belonging to these exceptions. Regarding interest, taxable interest is listed here. Basically, interest that you receive from local banks is not subject to income tax. Let's move on to personal reliefs. There are 14 items. I will break down into 2 groups, personal exemption and investment exemption. For personal exemption, there are exemptions for yourself, spouse, and child. For investment exemption, there are insurance, CPF, and SRS deductions. These are the ones to consider for tax planning. Tax rebate has one item called PTR, Parenthood Tax Rebate. It's a relatively special case. From now on, I will show you how you can optimize your income tax. As just mentioned, there are essentially only 3 items for tax planning, which are CPF, life insurance, and SRS. If you are a citizen or permanent resident, you can receive income deductions for CPF payments and top-ups. Considering the defined interest rate of CPF and its tax benefit, the top-up is must to do. Life insurance can be deducted from $3,004 to $5,000. I won't recommend buying premium just for tax benefits. You can decide based on your company insurance and all. For sure, the insurance you bought from your home country is not eligible for deductions. Finally, SRS. SRS is a voluntary scheme to encourage individuals to save for retirement. The annual SRS contribution cap is currently set at $15,300 for Singapore citizens and permanent residents, and $35,700 for foreigners. Let's simulate how good it is. Here I excluded a fresh graduate as her income and tax is marginal. The tax rate for a manager and a junior director is 4.4% and 9.6% each. Suppose they contribute $35,700 to SRS, their tax rate is reduced to 1.5% and 6.5% respectively. In amount, $2,900 and $6,200. For junior director, return on income is 17.5% as she saves $6,225 by contributing $35,700 to SRS. It's really amazing. The bottom line is that with SRS, you can do tax relief and retirement savings at the same time. Just to show you the average return, you can expect 6.5% annualized return when you invest in global stock ETF and bond ETF together. You can open your SRS account in DBS, OCBC, or UOB. You can do so online or by visiting one of their branches. There are 6 SRS investment options: fixed deposit, bonds, insurance, unit trust, ETFs, stocks, and REITs. My recommendation is obviously ETFs. You may want to watch the video to find out more on SRS investment. Thanks for watching. Catch you guys in the next one.